Hi everyone. I hope I'm audible. If I'm audible, can you just type in the chat screen? Hi everyone. I hope I'm audible. If I'm audible, can you just hi everyone, type in the slide? So we will start at sharp 11 o'clock. And I hope you can see the screen share also that is visible. Hello everyone. So I hope I'm audible and you can see me. If you can hear me and see me, just type yes, and then I'll share my screen. And if everything is good, then we'll start. So just reply if you can hear me and you can see me. I hope I'm audible and you can see me. Please type in the chat box. Oh, okay, thanks, Swami. Thanks. And I'm going to share my screen. So just let me know if you can see my screen. Okay, is my screen visible now? Let me just change the slide. Uh, is my screen visible? Can you see my screen? I'm showing the slide with the agenda, auto cycle history, current auto cycle, quarterly results, and all of that. Let me know once you can see the PPT screen. Okay. So we'll start. So welcome everyone. First, thanks for attending this YouTube live session. This was my first YouTube live. I think I tried once earlier, but I screwed up a bit and then I was a bit scared. So this is the second time I'm trying. I hope this time it goes smooth. And if if there are any glitches, apologies in advance. We'll try to fix it. We are going to have bit of discussion on auto sector, and those of you who track me, auto and financials are two sectors where I have been keeping a closer eye compared to other sectors because I felt there could be chances of some value creation here, given these are two sectors which have not done well for last 4 years on a relative basis. So of course, everything has given decent return from 2020. But when we look from cyclicity perspective, like the kind of profit and the kind of prices auto and banks had in 2018-19 versus now, still many of the companies or the industry has not been able to get to that level. So the whole idea has been to track the industry and see if the cycle is changing or not. And that is where I'm trying to go through all the quarterly results and con calls and try to get a sense. And I thought to update on the same. So that is what we will do today. It's not a stock specific presentation, but it is about a top down analysis to understand if the auto cycle is favorable from investing perspective or not. Now, disclaimer. So we are not registered investment advisors, and we will be discussing a lot of stocks, but nothing is an advice. Everybody needs to do their homework, due diligence, and then take their own call. So what we will do is we will try to understand a little bit of auto cycle history, because understanding the cyclic history is very, very important. It gives us probabilistic reward and risk scenarios to understand where we are in terms of industry cycle, and every industry is cyclic. And I consider auto as one of the little higher cyclic industry, like on a scale of 1 to 10, maybe somewhere in the middle, if not like a commodity, but surely it's not less cyclic. And we will see through the data and we will try to understand where we are in the current auto cycle. We will try to go through the quarterly results of Q4 of automotive and auto ancillaries companies, and we'll see how have been the results, what are the changes. And then I have gone through some 10-15 conference calls of the leading OEM providers, some of the good ancillary companies, and we'll try to see what is coming out of those con calls in terms of what is the current situation, how does the inflation looks like, how does the margin looks like, how does the growth looks like, how does the future guidance looks like. And we'll try to validate it with some of the third party reports. So because promoters or companies by themselves, they are optimistic and never ask a barber for haircut. So where should we look for alternative data? So I've tried to find some alternative data, some third party view, and we will try to validate this view with that view, and then we'll try to look at charts and then look at the key actionable insights, where we can go and take some action or track it. So this is what we are going to cover. So all good. Is there anything else you want me to cover? You can type and I will try to see if I have that info. I'll try to cover it. Apart from this, anything else do you want to cover, or maybe want me to cover in next version or something? So just keep typing in case there are anything else you want to cover. I'll keep coming back. and I will check it. And if there is anything else to be covered, I will do it. So let us go ahead. So first, the auto cycle history. And what I have done here is I have taken 14 years of automotive data in terms of the year-over-year growth rate separately for passenger vehicle. Let me just take a pointer. Passenger vehicle, two-wheeler, three-wheeler, utility, and overall. And this is the kind of year-over-year growth rate. So one thing you can see clearly, the growths are not linear like FMCG industry. Here, the growths are very non-linear, very zigzag. Like you can see, there is 1 year when you have this much of growth rate, and then the next year growth rate goes like this. Then it stays like this. Again, there is 1 year when you get a 20% growth rate. Again, it falls. This is one insight. The other insight is when the whole auto industry as a sector is doing well, don't expect each of the 4 sectors to do well in the same manner. Like see, when this year in 2010, PV was growing. In fact, three-wheelers were growing, but two-wheeler, even though the growth was 20%, but the growth was much lesser. And in 2012, it is the two-wheeler which showed, not two-wheeler, the utility vehicle. Utility was not showing that much of growth. And in 2012, utility really did well, but others didn't do well. So it's not necessary for all the 4 subsegments to fire at one time. The third thing is, if you look at these cycles, till 2007, things were doing well. Then 2008 didn't do well. Then 2009 and 2010, the industry did well. 2011, again, it suffered. Then 2012, the industry didn't do well. This is the exception. And then almost 2 years, they didn't do well. In fact, 2013 was very bad. There was a degrowth. And then again, they came back to growth in 14. Again, 15, there was little bit of subdued growth, but 16 and 17 was very good. And then top got created in 18. And then from 18, 19, again, degrowth. So this 19 degrowth was without COVID. So you can see every 2-3 years, this industry goes through a degrowth and then a base gets created, again, growth comes back. And if you see, this has been a 3 to 4 year cycle. But what has happened after 2019? So after the 2018 peak, post 2 good years in auto, 19 was a automatically bad year by cyclicity. But then COVID hit, and because of lack of mobility, people didn't travel. The auto industry sales dwindled, and this has happened in the first time that we had almost continuous 2-3 years of degrowth. In fact, utility, has made a comeback. But if you look at two-wheeler, if you look at PV, if you look at three-wheeler, all of them still they showed degrowth. So it's a cyclic industry. And what is the extent of cyclicity? So I have done another analysis, and I would remind you, this is not a 12 months auto sales analysis, because I just did this analysis some 2 months back, and that time still for 2020, in fact 4 or 5 months back, and that time we didn't have all the data for 2021. I think I didn't have data for December or November. So what I did is I took the sum of all the year and divided by 12. So you can say it's an average monthly data for a given year. So don't get surprised when you see these numbers are too low, because it's an average monthly data just to have an apple to apple comparison with 2021. Okay. Now you can see there is an analysis separately for PV, for three-wheeler, for two-wheeler, and for utility. And then this is the total auto numbers. This is a volume-based analysis, not a value-based analysis, which is total number of vehicles sold. And then how the CNX auto index has performed. So this is the industry volume number, and this is the auto industry price CAGR of the index. So one thing you can see, every 3 to 5 year industry goes through a year of negative growth, followed by revival, and then few years of high growth, which is evident. The orange ones are the negative growth, followed by green ones, which is high growth period. And last 3 years, the industry has grown in negative terms because of COVID and cyclicity. So 2019 to 22 has been one odd scenario for continuous 3 years growth. Now, what is interesting is there are two metric here, peak CAGR and current CAGR. So let me tell you what a peak CAGR means. A peak CAGR means if I start from 2006, or if I start from 2007, or if I start from 2008, in this whole journey from 2006 to 2008, what was the maximum highest CAGR return ever achieved, whether it is achieved on a 3-year basis or 4-year basis or 5-year basis? What was the most optimistic CAGR return this industry gave? And if we look at it, mostly that number has been around 8 to 9% for PV and two-wheeler, and for utility, this number has been 14.6%. And as a whole, the auto industry grows around 9% at its peak CAGR level. Like if you take a 3, 4, 5-year maximum CAGR. Of course, a single year growth rate could be high, but I am taking right from 2006 or 2007 or 2008 till today. So that is how we should see it. And if you look at the current CAGR has been just 3.3%. So if you take the numbers from 2006 till today, because we have seen 3 years of degrowth of minus 13%, minus 24%, minus 5%, this CAGR has reduced to 3.3% on a almost 10-15-year basis. In fact, for three-wheeler, it's much lesser. Your 33,000 number has come down to 16,000 number. And as a whole industry, this whole industry has grown less 3%. So against a GDP growth rate of 6, 7, 8%, whatever we have achieved in last 15 years, this current growth rate doesn't look good. The key reason being, all these 3 years of degrowth. And from a peak CAGR level, we are almost, 1/4 or 1/3 of the peak CAGR level. So this is the, this is the kind of worst phase the auto industry has been going in terms of cyclic. Now, how much is cyclic? How much is structural? How much is disruption? Is the market matured? I think those are the analysis which one needs to have company by company to arrive whether this will improve from here or this will deteriorate from here or this will remain like this. So are we good so far? Any questions or everything looks good so far? Okay, so I'll keep looking at the chat so that we know if there are any questions. I will handle. I know there is a lag, so appreciate if you can also talk about EV disruption. So I'll give you a flavor. So I will focus a lot on the con call transcripts and what is happening, and I have a section on some of others or recent development. There you will hear a bit about EV. But EV disruption, this is a big topic in itself. I'm thinking of working on some presentation I will do. But this meeting, this session also will give you some flavor of EV for sure, and which are the company who is doing what. You will get some flavor of it. Okay. Now another thing. So one more thing, if you see here, the industry has generated a decent CAGR. So if you look at the peak CAGR, at peak auto index generated 17% return, and even the current return is not that bad. It's almost your Nifty return. If you see the 10-year plus view, Nifty has given almost 12-13% return. So it's matching. So it's not like this industry is bleeding in terms of at least index level valuation, though the growth is bleeding in terms of long-term growth rate. So take care of, just manage this point. And one more thing, if you'll see the years when the industry didn't perform. So these are the years when industry didn't perform. Minus 2%, the index fell by minus 58%. Only 2%, index grew only 4%. With a 10% growth, index 91%. Again, 1% growth, minus 1%. And last 3 years, these are degrowth. But see, in 2018 itself, so market is always intelligent. When the year sectors peak out in cyclic, and I have been telling this, a cyclic sector, when it peaks out, it's not like market will fall when the bad result will come. What I have seen is market is always intelligent and starts falling 3-4 months before the actual bad result comes. So many times we get surprised, itna acha result hai aur fir bhi sector fall ho raha hai. That's because market understands that cyclicity. But even though the last 2 years have been bad, the index has given decent return. So always a falling price doesn't mean that the index is also equally attractive. We need to take all these things in consideration company by company when we go at valuation, but I'm giving a index level output. Now this is an interesting chart. Now where do we stand right now? And right now I'm taking only two-wheeler because a lot of these numbers I need to feed manually. So there is a association called SIAM, I think some automobile association. Then there's another automobile body called FADA. So they release a lot of numbers, and if you go to the FADA website, you will have the numbers in PDF format. So it needs a lot of data pulling from FADA website. So I have done only for two-wheeler because that is in the worst state right now. PV and CV, they are relatively better placed. Three-wheeler also worst, but it's a very small market, 2 companies, so I didn't want to focus there. But two-wheeler will give you the real pain. And if you look at the numbers, what I have tried to do is I have tried to put 2019, 20, 21, 22 numbers. Why 2019 is important? Because this is the year before COVID. So 20 and 21 number has a lot of COVID effect. You cannot compare some of the quarter data because the whole economy was closed. So if we really want to know if the cycle has turned, we need to go back to the 19 period and see if we are, crossing the 2019 numbers. And that will say if the industry is, turning around or not. So you can see the 2020 number. This is where in March we peaked. And looks to me that everybody realized COVID is coming and they tried to clear the inventory as much as possible because nothing happened after that for next 2-3 months. And then this whole April, May, June 2020 economy was closed, and then slowly it got opened and slowly this number went up. If we look at 2021, again, the second wave of COVID came, and you can see the big fall for the second wave of COVID. And it looked like the industry is reviving at least better than 2020. But when you look at the 2019, it didn't revive. Still, the numbers were way below 2019. You can see month over month over month. And in December 2019, this number looks like slowly, the gap getting closed. Now we are in 2022. And if you compare with respect to 2022, still two-wheeler is not doing good. But March and April have shown some spike, and we can see this gap is getting close. So time will tell if this growth continues and slowly we go above 2019 or not. Time will tell, but all we need to do is to track these numbers and then see how the industry is turning around. So we are still not out of woods in two-wheeler, but things looks like improving. We don't know if it is temporary or if this is a cyclic turnaround trend. The other important thing is, even though the industry has gone through this turmoil, the question is who is doing what. And if you look at the key OEMs in two-wheeler, it is clearly evident that TVS is gaining market share, because from 2020, 13.9% market share. In 2022, they're at 15.1% market share. So we blend all this analysis, market share analysis, company analysis, valuation charts, and that will help in taking better decisions. The other thing, if you see eicher Motor, they have gained very good market share from 3% to 4.9%. It's a little lower. My sense is maybe because the low cost vehicles might be making a comeback, and that could be the reason why they're little lesser on numbers. But eicher Motor in the 150cc segment, they say out of every 3 vehicles sold now, 1 vehicle out of every 3 is eicher vehicle, though they don't operate below 250cc, but still in the 150cc plus. Other companies, they have been here and there. So except Honda, which really did well, but then again, they're losing a little bit of market share. Bajaj has been losing market share, and Hero has lost market share by a big margin. So this is the status. Now, if we look at the recent quarterly results, so this data, again, I collected 1 week back. Again, daily level, the data is getting updated, but this is 1 week old data. And if we look at the OEMs, not so good. 2 have shown positive profit growth year over year. 3 have shown negative profit growth. Overall revenue growth, two-wheelers not good. Operating profit is down. So this is the worst scenario of two-wheeler, but at a company level, some companies have done well. So if we look at eicher Motors, eicher year over year revenue growth rate has been 8.6%, TVS 7.39%. And TVS, if we look at the EBITDA, EBITDT growth, both for eicher and TVS, it's good. So they are gaining the market share, and still in the toughest environment for two-wheelers, these 2 companies have shown some strength, and we will discuss when we go through the transcripts what they're doing, what unique they're doing, and all of that. And then on the tire and rubber side, very bad, very bad. So this tire and rubber product industry, at least I think 1 or 2 companies might do well, but not good at all. And basically they are growing the top line because of export and European market, but the operating profit margin wise, they have huge inflationary pressure, which they are not able to pass it to the end customer. But parts and equipment business looks relatively better. So if you look at this, more companies had positive profit growth. There is a positive revenue growth, and the operating growth is relatively much lesser. So I feel ancillary is space, parts and equipment is a space where there is high chances of finding companies which are doing much better than industry. OEM, small 5-6 companies, so you can easily identify. Now, if we go through some of these companies, so I'll tell you which are the companies which have done well. And some of these companies are doing well from last 2-3 years, despite of a negative auto cycle. So Minda Corp, if you see, they have done almost 19% YOY revenue growth rate. The net profit, operating profit growth rate has been also very good at 21%. Rajratan, I think now it's a well-tracked company. They have been doing extremely well from 2 years. They have continued to do well in this quarter. One new listed company, Rolex Ring, that has also done well. Schaeffler has been doing well. They're continuing to do well. Automotive Axle, this is a company which I saw many Axle companies are not doing that great. Like GNA Axle, I don't think the results were good. But Automotive Axle's quarterly results were good. So I'm telling, keep a track of these companies. Look at the charts where you see, good charts, good fundamentals. Study why they have been able to grow compared to, other players. Then Sona, some of the companies might be doing well, but the valuations could be a concern. Like, I really like what Sona is doing. Go through its PPT. It's very informative PPT to understand how the IC to EV transition is happening, how it is impacting, which parts are impacting in the vehicle and all of that. Then LG Balkrishna has done really well. Wheels is something which I was not tracking, but I saw this is done well, so I plan to track it. And then there are companies which are not doing well, and we'll see more about it. So Sandhar results were not good. Again, revenue wise, it was good, but these are the companies which have done okay revenue, but they have not been able to pass the margin, or they have been flat results. So some of these companies are Menon Bearings, like Greaves Cotton, Sterling Tool, Endurance, Sandhar. But some of these companies, the prices would have shooted up in last 1 or 2 weeks. So I'll discuss a little bit why it happened and all. So one part of the company said they are really doing well. Another part, they're not doing well. And we will discuss about both of them separately. So con call inferences now, how to read about this industry, what is happening right now, and what is the current state. So in terms of current situation, different companies have little different view. So if we see of Minda Corp, they are seeing slight demand pickup in commercial vehicle and passenger vehicle. But two-wheelers, they are still not seeing that kind of big revival, and they are cautiously optimistic. If you look at the C8 numbers, C8 number currently, they're telling inflation has been bad. Of course, the current quarter numbers were not bad, not good. And they're telling even the coming quarter, they're expecting the numbers will not be good. And they're highlighting that farm sector is looking positive. But the chip shortage issue is reducing, but this issue is still there. Two-wheeler, they're expecting with wedding and all things should come back, improve little bit. But CV and farm, they are bullish, and they're telling, CV and farm, they see a better scenario than two-wheelers. And Greaves Cotton, they're telling that the non-auto engine business and the retail auto business, they have almost bounced back to pre-COVID levels, which means the economy has opened because they have a, after-sales retail parts business, and they're telling it has bounced back to pre-COVID levels. In terms of demand and growth, so one thing is very clear. The demand and growth, most of the players who are doing well or who are telling that will do well, most of them, they're playing the concept of premiumization. So it's not the lower end of the vehicles which are, creating the growth. It's more the higher end and the premiumization concept, whether the premiumization is coming by improving the looks of the automobile, or it is coming by giving better features or a higher quality, but it is the premiumization, or because of, things like sensors and all of that. But premiumization is the concept which is driving growth. The other growth segment has been export. So some of these companies who are doing well, they are able to do well in the export, either by finding new market or, going and capturing market share. And if we look at Minda Corp, so they say the growth drivers are premiumization and some specific customer segments, which are basically the high value segments. If we see TVS, they are telling again the trend of premiumization in all the market, and we are confident that our premium products will do well. If we look at eicher, they are telling that they have found new opportunities in the market. So eicher international business has grown by 108%, and that is how eicher has done well relatively. So again, if we look at TVS in terms of demand and growth, so they're telling now we are seeing first time after COVID, there are people who are doing regular jobs coming out, which is very positive for the industry. And they're very confident that this year they will see the rural demand coming back. Urban will continue to do well. So the pain in two-wheeler is more on the rural side than the urban side. And that again correlates with, the premiumization will play out better on the urban side. And rural side is more your low value product. And maybe that is the reason why Hero has suffered worse than compared to other products. But if you look at Hero is also bullish, they are also, telling good things. We don't know if, that will convert into a number or not. But these were some of the insights. As per TVS, they're telling, as per their opinion, commodity might reach its peak in Q1. So Q1, the sense I'm getting is Q1 numbers, top line wise, it might be very good because the last year base was very bad, but the raw material pressure and the margins, even in Q1, they might get screwed, especially to players who don't have margin of, who don't have pricing power. But it looks like in Q1, it may peak out. And I think we may like to see how the steel and commodity cycle is playing, how the market is behaving. That could give another hint whether it has really peaked out or not, but let's see. And C8 is telling they will continue to feel pressure. Their margins were screwed despite of rising prices of their products, but they're expecting further 2% deterioration in margin in Q1. And again, they're going to take another price hike, but they have already told that will again not factor all the raw material pressure, which means again, the tire companies and all, they will continue to have a bad time in terms of margins. eicher, again, if we look at it, they are telling that in terms of inflation, shortage of semiconductor chips. So this is another issue, and it doesn't look like this issue is going to go off. In fact, TVS, as per them, they had a good demand. They couldn't fulfill that demand because of chip issues. All of them, they're telling slowly the chip issue is reducing, but it's not going to go away soon. This year, it doesn't look like it will get respite, but it is gradually improving and it will continue to improve. And now the players are having multiple vendors than relying on the single vendor, and they're trying to arrange for it. And you can see Royal Enfield, they're telling that even though they're not present below 250 segment, they're telling that we have almost 1/3 of market share. So let me just check if there are any questions so far. Yes. Rightly said, Nitin, the prices of vehicles have increased. So a lot of things which have deteriorated and cyclicity. So bikes are costlier by 30-40% because of, the norms of regulatory norms, the insurance regulatory norms, the inflation, the petrol prices. Of course, there was a natural cyclicity. So there have been lots and lots of reasons. And then this whole chip shortage. So multiple reasons. And that is why it is very difficult to make a view. So it's like you keep tracking on the green shoots, and then, you look at the charts, you look at the numbers, you find where there is a better value, better visibility. So I'll talk more about order book driven visibility. Again, whether they execute or not, we need to see. So in terms of supply chain, so see, TVS is telling one of our suppliers is not able to ramp up. So they had a lot of challenges, even though they had demand. So they are telling, and I give a little more respect to TVS Group because I have some personal experience where I have dealt with them in my previous job. And I saw they were very conservative. This could be one person who could be very different view, but I feel they are one of the better business groups. But I found the con call really, really bullish, so bullish that I'm talking with a little bit of caution. But we need to go through and see what is the kind of tone they have maintained in last 2 years. If they maintain the same tone, then I would say discard it. But if they were really conservative and then all of a sudden they have become bullish, I think that is something we should make a note of it. And some of the bikes, they're very positive about these bikes. And we can see they have taken away the market share, and they're telling we'll continue to take away the market share. And the export business is doing well. They have some premium launches, but chip shortage issue is something which is hurting them. In terms of supply chain for the entire, so Greaves Cotton also. So everybody says it has been a challenge. It is a challenge. They're trying to improve, but the improvement is gradual. Don't expect it to vanish, in next 2-3 months. So he says possibly little bit of better semiconductor availability. If you look at Sterling Tools, same thing. So everybody is suffering from semiconductor issues, and it is, not going to go away, but it is improving. Now, some of the other things. So what are the other things which are playing? So some of you asked about, tell me about EV, and also I'll talk about it. So tire companies, one interesting thing is happening, looks like everybody has realized in domestic market beyond a point, there is not a lot of growth. So everybody is looking at export for growth, and especially European companies, whether you hear from C8, you hear from AP Apollo. So export is an opportunity for tire companies. The other interesting thing looks like we might have a Asian Paints moment here. So everybody has become interesting in OHT market because of the growth and margins. So anybody knows who is the biggest OHT player in India? It's a very interesting company. Who is the leading OHT player in India? So I know there will be a lot of delay and I will not hold. So I will tell you the biggest OHT player is Balakrishna. So APL, so Apollo Tyres, C8, everybody's trying to go and grab a pie of it, and they're focusing. So those who are having Balakrishna, they need to see if, the kind of barrier to entry Balakrishna has, whether they will be able to sustain, or will C8 Apollo, they will be able to make a dent in it. So we need to track. The other thing about like Tata Motors, so there is an interesting thing, and this is not from Tata Motors. I'm sorry, this is from eicher. So we have a lot of Tata Motors fan, and this is specifically to Tata Motors commercial vehicle. eicher discusses this in the con call, and they say that there are players who are still not making money despite of. So right now the CV cycle is doing well. And despite of this, there are companies which are making losses, and we don't understand at that price point, how can somebody sell? In fact, some of the EV sales which has happened to the government, they are telling that the L2 bidder was priced 20% lower than the L1 bidder, and we are not agreeing for this kind of price competition, because we are price profit conscious people. We will take it when the opportunity will come, maybe in the private sector, because we cannot digest how somebody can make profit. So make a note of these things, even if this is not about eicher, but it's about the competitive companies. Maybe somebody can ask them the Tata Motors con call what is their view and what they feel about it. The other thing about EV is if you look at the growth in some of the companies. So Greaves Cotton, they acquired a company called Ampere 2-3 years back. It was a South Indian company. They were primarily present in South Indian tier 2, tier 3 cities, but now they have made it a pan-India company, and this is doing really well. So if you look at the quarterly numbers, they have done 27,000 vehicles in Q4 against 10,000 vehicles. So it's almost 150+% jump. And if you look at the number in terms of whole year, they sold roughly 52,000, 62,000 vehicles. So very good growth. And I don't remember which con call, but one of companies con call, they said EV is really picking up. And in fact, in some of the cities, the market share, overall market share is still low, but in some of the cities, the market share has reached like 8-9% level. The other thing which was there, because all of you will be worried because of Ola fire, there is a news that the government has asked to stop the production. So what these companies are telling, we didn't get any news asked from the government to stop the production, but it is more regarding the inquiries of, telling the qualitative data on the battery and a lot of things. So a lot of data government is asking in terms of the ensure the quality of vehicle, the battery, what they are doing, how they're testing, validating, but they have not been asked to stop selling. That is what I read in the con call. So that's bit on the EV. If you look at Minda Corp, see Minda Corp, they have done really well, 19-20% of growth rate in last 3 years when the industry has de-grown at -5, -10%, but they are telling we remain cautiously optimistic. So everybody is optimistic, but the extent of optimism is different. Minda is cautiously optimistic. TVS, if you see, they are very, very bullish. They are telling, and I don't know if because they are winning market share and they're doing much better than industry, but they're telling the customers we can definitely grow much ahead of the industry. And I'm very optimistic about 2022-23. Little cautious of wave 4. Both domestic and international market is mitigating. We have taken price measures to mitigate prices, inflation price. We are pretty confident that this year we will grow ahead of the industry, both in domestic and international, with strong portfolio of brand, and our sustained cost reduction initiative will help us to significantly improve our EBITDA going forward. A lot of interesting things in terms of everybody is not at the same stage playing the same game. Some are little more bullish, some are lesser bullish. The other thing is, if you look at the con call of ancillaries, and some of these ancillaries where TVS is one of the bigger customer, they also look equally confident. So I'm a little scared of the kind of projections they're making, but they're telling that these are order book based projections. So 20-25% kind of growth projections, 35% growth projection, telling it's order book based. And when I see their client TVS and eicher, there are two big clients for them. So that could be another reason. If you look at Hero, so Hero has been a big underperformer. But what Hero is telling is already we are seeing signs in April, and we have no reason to believe why two-wheeler industry cannot grow in double digit in FY23. So FY22 PV is doing better, CV is doing well, two-wheeler still not out of woods. But even the worst player is telling that FY23 they're expecting two-wheeler also to come back to growth. And they are also telling that they have multiple launches coming in the coming fiscal, which will, and added with all the action they are confident of. So everybody is telling they will gain market share, but we need to see actually who gains market share and who loses. C8 is relying on export, so tires, they don't look so well, and of course the stocks are beaten down, but they have margin pressure and growth. They are looking in the export market. Sterling tool, they're telling they're not worried now much about fall of margin numbers. We have seen this, and I believe things are start to softening up. Margins will go back dramatically up again, and we are expecting a huge growth. So Sterling tools, they have got some new orders on the electric vehicle side, and you can go through the investor presentation con call. It's very interesting, but I'm just leaving you with the statement. They're expecting a huge growth this year. Lumax, because still the con call transcript is not out. I went through the con call, so I have just put my words, but these words are basically a replication of what I heard in the con call. So again, they're expecting almost a 25% growth with double-digit margin. So pre-COVID, they used to work around 11-12% margin, if I remember, and the margin fell to 8%. Now again improving, still in single digit, but they're telling we'll go to 20-25% growth rate with 10% plus EBITDA margins. So again, one bullish call, second bullish call. Sandhar, if we go and here, they're telling 35% order book growth rate. And how they say is, they are telling last 2 years, we have been making calls to our OEMs asking ki project aage badhao. And now it is the first time when we are seeing that they are the one who are calling us and telling, is it going on track or not? And they are giving again a 35% target. But again, a lot of these companies, at least Sandhar, they are new, they are only 3-year IPO history. And I have had some bad experience with companies which are not proven in terms of last 4 or 5 years of management. So take all these words with pinch of salt. We need to track and see. But he's telling with whatever signals we are getting from the automotive industry, from market, some of the challenges seem to be abating. It seems we should go back in a flying mode soon enough with positive note, and with that positive sentiment, I am happy to answer. So this tone has been relatively bullish now compared to last quarter. So this was with a lot of industry and what we heard. But as we say, never ask barber for haircut. So what do we have? Alternate view. So I read a very interesting third-party view from ICRA. So in month of May, ICRA has done a survey of automotive dealerships. So they surveyed some 100, 200 plus dealers, and they try to build a common view coming out of all the dealers. And if you go to the ICRA website, go to that special report section on the front page, filter by automotive industry, and you will have this report. So ICRA has given its output, its views based on, interviewing some 200 plus dealers. And you can see in FY22 itself, passenger PV is doing well. It has come back well. Commercial vehicle is still doing really well. Automotive, it's suffering, and expected is still -6 to 8% growth rate. But for FY23, the projection is PV will continue to do well. Commercial vehicle, it will reduce a little bit, but it will continue to do well, and the two-wheeler will make a comeback. So somewhere, I think also OEMs, what they're telling, more or less, these numbers are matching with each other. CV demand recovering after 2 years of downturn, high base to impact growth in tractors, but volumes to remain healthy. Semiconductor shortage limiting growth in PV, but availability improving. So a lot of things which are talking in the con call, same thing is coming out in ICRA, which gives confidence that, okay, we can trust them. Demand remains subdued in two-wheeler segment owing to rising cost of ownership. So one of you highlighted, and that problem is there, especially in two-wheeler, because two-wheeler in itself is a price sensitive product, and there if the prices increase so much, then it's an issue. So same thing in detail, subdued demand, all of that, so this is the survey which has done. They received, 22 responses from dealers. Sorry, it's 22. 80% of two-wheeler respondents indicate demand has been subdued. 53% say that it will be better than previous year. Supply constraints, they are also talking. One more thing, the inventory holding period. This is another thing I saw in con calls and I have not highlighted. So the industry inventory period has reduced, which itself is telling that, look, there is a demand, but they're not able to cater to the demand because of the chip shortage issues. So the other data to track, if we can get, is how the industry inventory is behaving. And if the inventory is low, then we can be reasonably confident that, there is a demand. The impact of semiconductor shortage, it's there and it's impacting everybody. And 40% of these dealers indicating there is an increasing waiting period. 60% are reporting that waiting period has not resulted in, increased cancellation. So cancellation is the other thing. If the OEMs are not able to cater, some are telling that cancellations are also happening. So go through it, and finally we have the final view. We know the numbers, how it looks like from 2-3 sources. If we look at charts, this is something interesting. So now when you look at this is the monthly data. Yeah, this is the monthly data. So if you look at the CNX Auto monthly chart, see the industry, again, I will tell you, the industry bad numbers started flowing somewhere in 2018. But see, the market, at least the index peaked in 2018. So I will tell not only auto, any cyclic industry, don't think that only the bad result will come, then it will peak out. So don't get surprised. Markets always peak out few months before, and market always bottoms few months before. And if you see this peaked out, and from this in COVID, this went here from almost 12,000 to 4,000. So as I said, it's not like we are getting things at mouth-watering valuation, not at an index level. We are back to the same level, and you can see why there has been a 12% CAGR even on a long-term basis. And actually in June, July itself, last year, it tried to break. And those of you who can understand a little bit of technical, see this line as a demand supply line. So if there are more buyers, prices will go up. If there are more sellers, prices will go down. The moment it came to this level, see the fall from here to here. It says the moment it is coming to this price, the sellers are dominating and we get new set of sellers. Maybe those who have got stuck at these levels, maybe they are coming and selling. And continuously 2 months, you see, it tries to break, but it couldn't break. And next high was lower than this. Again, we are down. But what is happening is we are not falling also big time, and reverse has happened. When the prices fell, the reverse of this, so this is called body and this is called wick. So when the wick is on the longer side, on upper side, it means the sellers are dominating, and the wick is longer on the lower side, it means buyers are dominating. So slowly it is getting in a zone where it might get stuck for some time. But how the auto numbers will come in next 5 to 6 months, if the cyclic turnaround happens, my sense is you might see a breakout here. If it all fizzles out, you will see it will again create a top, and maybe it will go down, or maybe it will just move there, go range bound. So we really need to watch this level. And I am showing you only one chart for the lack of time. But when you look at a lot of charts, like look at TVS chart, you will see a lot of similarity in some of the leading charts, which create the indicator. So same way we need to track these charts and look for, the breakouts and all of the things. Or if we see value in terms of valuation wise. So as I said, there are two kinds of companies which are doing well. The valuations are not cheap. Like Minda, I know they're trading at 28x after falling from 290 rupees to 200 rupee, growing at 20%, giving cautiously optimistic view and beating the industry. And the industry numbers. So some of the stocks like Rajarathan, it is in a very good momentum. Even this crash, they fell 30-40%, and again they have recovered. So there are companies which are doing well in momentum. There are companies not doing well, heavily beaten down, but companies like Tire, still margin pressure is there. And then there are companies which are beaten down at 10x level valuation, giving a 25% kind of number outlook. So if you look last 2 weeks, Lumax share price has gone from 950 rupee to 1130 rupee. My reading is one PMS fund was selling from 1800 to 1000 rupee. There was a FII selling which was happening. And if you look at the quarterly FII data, last quarter, the FIIs were left from 0.75% stake to 0.25% stake. And 2 weeks back, one day, this company went from 950 to 1050 with a 2 lakh volume. And in the 2 lakh volume, there was a 25% delivery, which means 50,000 shares got delivered. And this FII is holding 24,000 share. My sense is maybe this FII exited, maybe the supply is over, that is it's flying. But I would say don't neglect, take momentum in a different way, take value in a different way. For momentum, we need to track differently. We need to look at chart. For value, we need to see financials. We should have conviction in future visibility. See what is their future guidance. If a 10x company is telling we will grow 35 and we are reasonably assured that 20% se to grow karega, charts will change. Market makers, they make the charts. So take both momentum and value and explore it. I am giving you hints in terms of all these companies. We need to do own analysis, and I am also doing and tracking. And for me, it's not like, punch everything story. The way I am taking it, I will keep gradually increasing position based on how the industry is performing, how the numbers are coming up, how the charts are shaping up. The another thing on cyclicity. So it's a very, very interesting chart. This is the chart of how many credit rating upgrades and how many credit rating downgrades ICRA has done for the automotive industry dealers in a given year. If we look at, this is the rating, and this right side chart is important. So this right side chart, the blue line is the upgrade. So this tells in 2016, 14 dealers got credit rating upgraded and 10 dealers got credit rating downgraded. And dealership business is a much more painful business because they need to maintain the inventory and all. So in bad cycle, dealers, they feel the real pressure. So when the industry was thriving in 16, 17, 18, you can see there were more upgrades and less downgrades. So I will say track these kind of data. It gives a lot of hint in terms of future, what is coming. And when you see the future peaking out in terms of price, in terms of the best thing happening for multiple years, these are good sign. And then the cyclicity reverses and you can see more downgrades. And now you are going through downgrades for last 4 years, but slowly the downgrades, you are not getting more new downgrades. Even it is worse. It means maybe the industry has, reached its worst right from here. So this all data helps in building view in terms of understanding cyclicity and all of that. So let me see the question. If no more questions, we will summarize the insights. So SWOT analysis EV, this will be a very, very big topic. It needs a good 2-3 hours of effort. So maybe I'll do some time. I'm doing a lot of work there. It's an EV two-wheeler market in India. I think there is a... Yeah, so market, if you see at least till March, some of the companies are doing well. I showed you Greece quarter numbers, that gives you a hint. And they are telling that it's not like things have stopped. They are being questioned on the quality, but we need to see if, they are lying, or we need to see the numbers. I have not gone through the April number of FADA. Maybe I'll check this number separately and update. So it's personal choice who wants to play how. Some who like to have a concentrated position, they go for a, concentrated bet. Those who are, little diversified, they like to go with basket. When I play top down, I like to more go with the basket, but rotate. So I use Techno Funda and I like to rotate. So many times, because it's different sectors, different set of companies, different stories, it may not be like everything will play in the same way. Like you can see a Raj Ratan is playing from last 2 years. So I would better go with a basket, but I will rotate that basket depending on, who is topping out on chart. Also, there are a few stocks where I don't like the valuation. Like if I talk of Endurance, I didn't like the valuation at 1100. I expect it to come down to 750, but that is not happening. Simple reason. If you'll see the shareholding of Endurance, 98.5% of the share is with either with the promoter or very, very strong FII who are not willing to sell. All their con calls full of FII. So when the stock is cornered 98.5 and nobody will sell, the premium valuation can remain premium. So one need to take their own call, based on, every company, company by company. So I will tell you what companies I am tracking and I saw. So see these con calls transcripts. So you saw like what Sandhar is telling, what Sterling Tool is telling, what Minda is telling, what they're doing. And I'll tell you a few more names which I am studying because of, these growth reasons. So capex wise, I think there are certain, again, even though it's an auto industry, it's very different. Every segment is different. Certain segments are very capex heavy, certain are less. So tire and all, they're very capex heavy and still they're doing capex more in OST. A lot of ancillary, they are doing capex, like if you see Sandhar. So one thing is not only look at future capex, look at companies which have done a lot of capex in last 3 years and still at the same sales level as pre-COVID. And if these assets can generate same kind of fixed asset return, then that their current capacity utilization may be 50, 60, 70%, which means if the cycle turns, there is some levy of operating leverage. And that is what you see whether you go through a Lumex con call or if you go a Sandhar con call. And when you look at the kind of capex they have done, those things will be evident. And then again, based on growth visibility, some of them, they are doing order book based capex. Some companies, they don't do con call. Like there is a company called India Nippon Electric. If you see their capex between 2012 to 19, it took 7 years to double. But the last capex has doubled in last 2 years. And still the numbers are not that great. One reason being they lost one client called Greece Cotton, which used to give 70 crore revenue out of 500 crore revenue. But despite of that, in such a cycle, they could maintain the revenue. That happened because they have done 50% growth rate in after sales market. They have done 50% growth in export market. And India Nippon Electric is nothing but it's a company of TVS. And if TVS is giving such a bullish con call, so I'm telling, look at the capex data, look at the prices, look at the customer con call. There is so much to relate. because in many companies, a lot of things will not be out. Somebody will lie, somebody will not do a con call. So leverage all of this, and that will give you a better view. Three-wheeler, it's too small and the industry is not still out of wood. I checked the April data, still it doesn't look good. So we need to see some bit of revival, and even if you have to play three-wheeler, you have the same one or two companies. So Atul Auto, I am tracking, but again, I think they're in, they've started taking debt also. So nothing more to play, hence I didn't look at three-wheeler because you don't have much option. So exports actually, the war has not been an issue in terms of demand, and war has been a big issue in terms of raw material. So the energy prices are really up, that is being discussed, and that is why the margins are suffering. And some of the key players to export have been tire companies and all, and they're like talking about the big margins compression which has happened. Endurance talks about the same issue. So Endurance has a dedicated kind of CEO head, whatever you call, for Europe. He was asked about, and he told the energy prices issues and all is there. So demand is a lesser issue, margin is a bigger issue in Europe. Okay, so I'll go back to now key insights, list of companies and all. So first, supply chain concerns in terms of chip shortage, it remains, but improving slowly, still no word of perfect optimism. Inflation, it is expected to continue in Q1, and Q1 numbers, though with a lower base, the top line will look very good, but the margin pressure will be there, especially companies which have been suffering on margin. But some players are expecting it will peak out somewhere in the Q1. Opportunity areas, look for companies. Go to, I don't know how many of you know this, and I covered in one of my YouTube videos. There are websites like finshots.ai and all that have done really good work. What you can do is you can go there and you can tick whether you want this word to search in con call, you want to this word to search in investor presentation, you want to search in annual report. Give these words like premiumization, export, all of this. Filter only auto industry companies, see what companies are coming out, see what they're talking, because see, it's a continuous exercise and you will have to do it for yourself unless somebody is managing money. But there are intelligent ways to identify, rather than tracking 100 companies. You should know which are the companies you should track. Look for the word market share, see what is being talked, who is gaining. So that will give you a lot of quick insight in terms of where to act. Two-wheeler looks worst placed. PV and CV is doing relatively better and expected to do, though next year two-wheeler FY23 expected to revive, and FY23 surely looks way better than FY22 as of now. And again, I will tell you, I have few friends in auto sector, and it's my observation from last 1 or 2 years. So it's not like they know everything. They also work in the same way. So he was saying, like, when marriage and all are happening, all of a sudden things became better, and we thought it has revived, but again after 2 months things came back to normal. So even CEOs, employees, nobody will have a 1 year visibility. Everybody plays with the same kind of information. It's just that somebody is receiving that information first and somebody is receiving that information last. Then few companies, they have a very aggressive outlook. So Lumax, 25% growth based on order book and double-digit margins. Sandhar, 35% growth based on order book. SJS, yesterday I attended the call. They are telling 20-25% growth, where 85% of the growth is already covered in the current order book and similar kind of margins. Then if you go through Rajratan and all, they continue to be, they're telling, I don't know about growth in terms of value because I can't control the prices, but I can assure you the volume growth will stay there. Sterling Tools, some big deals have happened on the EV side. They have a new product on the EV side. It's very interesting con call. They expect 4-fold increase in this division. Shanti Gears, very good result. So if you look at the companies I am tracking where I can see something bullish, TVS, eicher, Mindop, SJS, Sandhar, Lumax, India Nippon Electric, Sterling Tools, Endurance, Shanti Gear, Rajratan Wire, Gabriel, Sona Comstar. Gabriel, one thing I saw, there is a little bit of royalty issue. So they pay 2% of royalty to the parent, which is a little higher when you look in terms of profit, though they have done well and the outlook is good. Again, we need to go through all these RPTs and all, because in bull market, nobody talks about it. But when bad market comes, these things become important. Sona Comstar, I really like what I'm reading. Valuation is a concern. Scaffler has been doing well. Greaves, they are doing well on the EV side, but still the path to profitability. So you need to build a little bit of estimate, because fourth quarter it looks like slowly at EBITDA level, the EV business, first the EV business is becoming significant, and it's breaking even somewhat on EBITDA level, if I remember. So a lot of these valuations needs to be taken care. Later on, consolidation will happen. So we need to see where we want to build a portfolio, how we want to catch it. So some of them are EV stories, like Greaves is a EV story, Sterling Tool is a EV story, partly. Our Lumex, they are typical stories where not disrupted by EV, because Lumex is more LED lights. So EV or no EV, you will need lights, and EV will have more LED lights. Sandhar is locks and all different components. So many of the components, no impact. India Nippon, we need to see, because there is a IC business and there is a EV business which they're building. So one business is getting impacted, the other will grow, how they balance it out. So every company is different. We need to track every company separately. SJS is into design aesthetics and not only auto player, but slowly a FMCG based, like in fridges and washing machines, but still low part of business, but still a story. A lot of these companies have grown because of exports, because of aftermarket sales, and those businesses have a relatively better margin. So I would suggest focus on some of these companies, go through it, build your view. Also, inflation, if it is controlled, my view is it will help both top line and margin, because if there is lesser inflation, it will help in terms of purchasing power of the people, which will help demand, and we know how good impact it can have on the margins. And there are a few companies which have beaten the market in last 3 years. So premium companies, sometimes they keep remaining premium. So that is why I'm telling, don't ignore them. There could be different ways of playing on charts with a stop loss or whatever, but if in such a bad cycle they could do well and they're still continuing to do well, there is something good there. And few companies have very aggressive outlook, but I am cautious, because these companies may have 3-4 years of history. That is not enough to evaluate them. And having burnt hands 1 or 2 times, at least I didn't burn hand, but few things surprised me. So I want to be cautious there, rather than just blindly telling that okay, it's a 30% growth companies. So these are some of the insights, company list. So I hope I have covered everything in good 50 minutes. So I'll just again look at the questions, and then we will wind it off. Thank you everyone for appreciating. SSWL, I don't track steel strips, but I think the company is doing well. I need to look at it. Somehow I've not tracked it. Atul Auto, still the 3-wheeler numbers are still not good. I think they have doubled their capacity. So they have a huge capacity, but still they are like almost, I think 50-60% of the world capacity. So only when the 3-wheeler numbers will come back. So far in April data, it was not there. So we need to look how the May or June data looks like. Talbros, I have not studied it, but it looks interesting, maybe worth studying. Suprajit, it's a very, very good company. I mean, I think it's one of the best companies. Somehow I have not yet tracked it in detail, but it's a very, very good company. And I think even if one is not invested in Suprajit, to get a view on the auto market and its lesson, right, you highlighted, I think one should always go through Suprajit's presentation, because I remember, they are very realistic in what they say. I have gone through presentations. It's just that I've never done a detailed work. So we should always look at Suprajit, what they are telling, to get sense of industry. FEM industries, I think, see the light players, of course, EV will not impact them. It will benefit them, but it's a question of, it's a cyclic industry. So it's more of a question of how much you would like to give in terms of valuation. So Lumex is also there. FEM is also there. One need to study, pick their own companies. So similar to Lumex, I think FEM could also do well. Jamna, I have not studied. Motherson, I have not studied in detail. I'm looking more at the smaller scale companies, because I feel, the chances to, get higher growth rate is there. Haven't studied. So whatever companies I mentioned, I've studied. So these are the 15-16 companies which I am studying. If I find something more interesting, maybe you just write it to me. If you find something interesting with some data, why you feel it is interesting. If it looks interesting, I will try to, do it. So Menon Bearing, I used to track and I used to like, but I exited because now I think there are other companies also. So it's a very relatively smaller company. I used to like, I still like it, but relatively I see there are more growth opportunities somewhere else, because Menon, they extracted a lot of growth last year also. So I was invested there. So go to FADA website. So if you go to FADA website, the problem is a lot of this data is in the PDF file. So that is why I said it takes a lot of effort to convert those PDFs into Excel numbers and these charts. Second, if you have access to Ace Equity and all, which are costly like 90,000 rupees, they release the auto data. So that is another way which comes with a lag, but that is how you should see it. Varroc, I think they have sold part of their business, and because of that, I think the debt issue will resolve. So it needs little fresh perspective, look fresh at the business which they will be holding, how post sell off, how it will impact the balance sheet improvement, and do all of this. Okay. And we all need to have some kind of filter, some kind of screens, because we cannot analyze all the companies. So I have some of those by which I get some 20-25 companies and I study it. So a lot of companies I may not have any idea because it's not possible to track everything. So TVS, see, Ayan, so much I discussed about TVS, so much I discussed about eicher, what is happening there. So of course, these are OEMs I am tracking. And see, the reason I track OEM, one more reason is a lot of ancillaries I am interested. The fate of the ancillaries will get decided by the OEMs, and we need to know which OEMs will do well, and hence we need to understand. China plus one strategy. So you saw tire companies talking about it in the Europe market. They're talking, and if you look at the Apollo presentation, they're talking about China plus one strategy. If you look at C8, they're talking about it, but it will not happen in one day. And still, we need to see. Just having China plus one is not important. Is the industry having a good financial economics, or the industry is very commodity industry, like a tire company? Even like the only reason I'm interested in C8 because they have 70% of tire sales in aftermarket, and aftermarket is still a better pricing power market, and still they are in such a bad shape in terms of margin. So take all of that, even if you are looking at China plus one strategy. So I don't know. I mean, how can I say? I mean, we have to see. We don't even have history of promoter who has delivered. If there was a promoter who had a public history of 10 years, and when he delivered, when he said, we could have had some confidence. But when we don't have that history, either we can believe, I mean, we don't have a way to evaluate. So I don't know how I can say that whether they will do or not. All we need to do is we need to track the prices. We need to see the chart strength. We need to see the quarterly numbers. The only thing which gives me confidence is for Sandhar, TVS and eicher, they look like two decent clients. And TVS and eicher, it looks like they are showing very good prospects and they have some history. So with that, maybe we can believe that that will flow to Sandhar. But on the margins and all, we need to see if they're really able to improve the margins or not. And even on a 35%, that kind of growth rate, I become more cautious when such rosy pictures are given. So let's say I'm invested, but I don't want to say anything here. I can change my mind even, see, in market, we have to be very flexible and very dynamic. So that is why I don't even talk a lot about a lot of these companies. I don't write a lot on threads. I do analysis. I present the analysis so that I get questions. Those questions help me to think. But beyond that, I don't want to talk a lot about a lot of these companies because some of them, they still need to prove themselves in the market, not long history. Okay. Yeah, sure. I will check SSWL. I know it is doing well. Some of my friends, they do track. Somehow I have not tracked, but I will check that, Jyoti. Okay. So thank you all. Thanks for your time. Wish you a very happy weekend, and we'll meet sometime again with some presentations. Okay. Thank you. Thanks a lot. We are closing it.